Let's take a deeper look onto the meaning on bonds and sukuk. So firstly, what are bonds and sukuk? Sukuk is an Islamic financial instrument that is similar to a bond, but operates under different principles. While bonds are interest-based debt instruments, sukuk is an asset-based investment instrument that complies with Islamic law or Sharia. Bonds are when a company sells its bonds to an investor at a certain interest rate for a certain period of time, and then the investor pays the interest in addition to the original value of the bonds. This is contrary to Sharia law, unlike sukuk. A main difference between them is that Sukuk are Sharia-compliant financial certificates through which investors gain partial ownership on an issuer's assets until maturity, while bonds are financial certificates through which investors lend money to the issuer, indicating an obligation for repayment at maturity. Moving on, let's learn about the different types of bonds and Sukuk. Some types of Sukuk are speculative instruments, murabaha instruments, instruments of participation, ijara sukuk, instruments of manufacturing, and some types of bonds are corporate bonds, municipal bonds, convertible bonds, zero coupon bonds. A lot of people get confused stocks with bonds and sukuk, so the main key difference is that stocks are issued by companies only, whereas sukuk and bonds are issued by both companies and governmental entities. Sukuk and bonds commonly promise fixed returns, as well as the repayment of the principal, while stocks does not commonly promise fixed returns. Moreover, sukuk and bonds have many uses as shown in the video, including project financing and debt refinancing for bonds, and real estate and infrastructure financing for sukuk. As shown in the graph, the statistics show that a large percentage counts for the listed issuance imports in Saudi Arabia for about 70% of the market. And that brings us to the end of our video. We hope you enjoyed watching it and learned about bonds and sukuk.